everyone to Karomia's DMA Masterclass. My name is Karel and I'll be guiding you through this session. Today, you'll learn how to conduct a thorough double materiality assessment in practice, compliant with requirements while remaining very pragmatic. After a little bit of context, we'll go through our 5-step process. Then, we'll counter 3 questions we often receive. Can I do it in Excel? How often do I need to do a DMA? And how to involve my auditor? At the end, we'll share an overview of what a double materiality assessment with Karomia looks like, compared to one without our software. Let's get started. At last, the European Union is leading in corporate sustainability. As part of the European Green Deal, the Corporate Sustainability Reporting Directive, or CSRD, was adopted. The CSRD requires companies to report relevant information about all impacts, risks, and opportunities across environmental, social, and governance matters. The methodology through which these impacts, risks, and opportunities are identified and assessed is a double materiality assessment. The European Financial Reporting Advisory Group, or EFRAG, plays a critical role in providing guidance and standards for double materiality assessments. EFRAG's guidelines assist companies in implementing comprehensive materiality assessments, ensuring consistency and compliance with European Sustainability Reporting Standards, or ESRS. Now, let's break down what double materiality is all about. The concept stems from the need to report not only on how sustainability issues impact your organization financially, but also on how your organization impacts society and the environment. It's a dual lens approach, hence double materiality. Financial materiality is based on whether it could be expected for a sustainability matter to trigger material financial effects. A material effect could be on your development, your financial position, financial performance, cash flows, access to finance, and so on. Impact materiality, on the other hand, is based on your impact on people or the environment. The goal of the double materiality assessment is to identify all material sustainability matters to report on in your CSRD report. A matter is considered material when material impacts and or material risks or opportunities are linked to it. The ESRS do not mandate a specific process or sequence of steps to follow when performing your materiality assessment. What follows here in this session is Karomia's own 5-step methodology, one that is both pragmatic and validated with auditors. However you do your assessment, the key is to be structured. The first step is an IRO analysis. Think of this first step as a 360-degree scan of your company to identify all actual and potential impacts, risks, and opportunities. During this step, EFRAG requires to consider your entire value chain, including your upstream and downstream value chain, in addition to your own operations. Also, you need to include each sustainability matter listed in ESRS 1, paragraph AR16, to map all identified impacts, risks, and opportunities on this structure. Start from the information you already have or have access to identify impacts, risks, and opportunities. Start with a listing and description of your most important commercial activities, examining your business model and organizational structure. Also include essential internal activities in this exercise, focusing on those crucial for your main commercial activities. Next, tap into the wealth of information contained within company documents such as annual reports and policy documents. Also search for and scan competitor reports and other relevant sector-specific research. This initial sweep provides a baseline for understanding the broader landscape of potential sustainability issues and opportunities. Another potential source for impact materiality is scientific research, particularly for environmental matters, to objectively assess environmental impacts. The output of this IRO analysis, a complete initial listing of impacts, risks, and opportunities mapped on the before mentioned ESRS sustainability matters, ready to be assessed in the next step. The challenge in this step is not to find the documentation you need, but to extract the relevant insights from it. Humans can't read that many pages in one day, but today the computer can. And these technologies are improving by the day. Therefore, we, Karomia, automatically generate all impacts, risks, and opportunities for you by integrating our cutting edge semantic search technology with artificial intelligence. To go through all data in detail, let's show you how. We collect company data from you, a description of your commercial activities, as well as an upload of all relevant internal and external documents you might have. When submitting, we analyze all data, and our AI auto-generates contextualized impacts, risks, and opportunities for each of the ESRS subtopics. Select the ones most relevant to your context, and you are now ready to engage your stakeholders. Which brings us to the next step, identifying the stakeholders you want to engage in your double materiality assessment. This step is aimed at understanding which individuals or groups are or are likely to be affected, positively or negatively, by your operations and value chain. It includes both internal and external stakeholders. For the financial materiality assessment, it might be relevant to also include investors and other financial counterparties, such as banks. When in doubt whether or not a stakeholder group is relevant, we recommend including them in your data collection to find out. To simplify the process and reduce efforts, merge similar stakeholder groups where possible. The question is when to split and when to merge stakeholder groups. Merging might be needed to ensure a reasonably representative result from each stakeholder group. Splitting a stakeholder group in two or more subgroups mightn't be required when you're interested in the specific opinion of those subgroups, or when you want to ask the subgroups different sets of questions, or assign different relative importance to their answers when calculating your materiality results. To simplify things further, you don't need to engage all stakeholders on all sustainability matters. Engagement with stakeholders who are not affected by a specific sustainability matter or won't offer relevant insights is not meaningful. For example, you don't need to ask external stakeholders about the working conditions of your own employees. Now that you know who to engage, time has come to start collecting data from them. This entails understanding concerns and evidence about your actual and potential impacts, risks, and opportunities. It also helps to grasp the importance of the sustainability matters from the perspective of your affected stakeholder groups. EFRAG sets out what to collect data on. For it, they break down impacts, risks, and opportunities in their characteristics and criteria. Impacts are assessed by their severity from the perspective of the affected people or the environment. And when they are potential impacts, they have a likelihood as well, expressing the chance of the impact materializing. Severity of negative impacts can be in turn broken down in scale, how grave the impact is expected to be, scope, how widespread the impact is, and irremediability, the extent to which the impact can be remediated. Positive impacts only have scale and scope. Financial risks and opportunities are assessed based on their likelihood of occurrence and the potential magnitude of their financial effects. To estimate magnitude, you can use either monetary amounts that are relative or absolute, such as operational costs. Compared to financial statements, the time horizon for assessing financial risks and opportunities is longer. This longer time horizon may result in the need to consider the cumulative effect of a sustainability matter on revenues, costs, etc., over a lengthy period of time. Next, you select the most appropriate methods for collecting responses from your stakeholders. These methods fall into three categories: surveys, focus groups, and individual interviews. Surveys are particularly efficient for collecting data from many respondents and to generate quantifiable results. In contrast, focus groups facilitate in-depth discussions, offering a richer understanding of stakeholders' views and motivations. Individual interviews, while more resource intensive, provide detailed, personalized responses, thereby offering an in-depth understanding of individual stakeholder perspectives. Whatever the method, Make sure to follow a well-defined script for maintaining the consistency and comparability of the answers across different groups and sessions. Always start by providing context, even in a survey. Why are you here? What's the objective? What will your answers be used for? In addition to the quantitative scoring of the impacts, risks, and opportunities, encourage participants to provide qualitative information. This enriches your analysis, offering a more nuanced understanding of the IROs under consideration. It's key to keep your stakeholders engaged so that they don't drop off. Add a personal introduction, for example, the video of your CEO to welcome stakeholders and highlight why they are here and how their input will contribute. Don't overwhelm stakeholders with questions either. For surveys, 10 questions would be the maximum for external stakeholders and 15 for internal ones. Limit interviews and focus groups to 60 and 90 minutes respectively. As a consequence, you might not be able to ask every question assigned to a specific stakeholder group to each respondent of that group. In the Karomia platform, we solve that by employing dynamic survey monitoring. We select a subset of questions for each respondent based on their declared level of expertise on certain topics and the relevance they assign to each topic, while at the same time ensuring that all IROs get sufficient responses. To increase the chances of collecting relevant high-quality stakeholder data, asking good questions is crucial. What we've seen working really well is the following. Reduce the cognitive load for respondents by using a consistent question format for each type of impact, risk, or opportunity. Provide context on what that impact, risk, or opportunity might mean in your context and how to assess it. Where applicable, translate your questions to the native language of your respondent. Isn't this all a lot of hassle? You might wonder. Besides using dedicated tools to make this more efficient, like Karomia's, it's about how you approach this. Stakeholder engagement isn't a burden, it's an opportunity to tell your stakeholders that sustainability really matters to you. This is also how we designed this in our Karomia platform as a two-way communication tool. Let's show you how we tackle this in the platform. Everything is built in, structured, and automatically synced. You can share your surveys or start your interviews with one click, and all data is kept in one place. In the materiality calculation step, the objective is to turn all collected data into final results to assess materiality. This step is critical in identifying the most significant areas for your focus and to define the scope of your CSRD report. What do you need to report on and what not? In the Karomia methodology, the calculation process begins by assigning different weights to the scores collected in the previous step. Aggregation is done on 3 levels. First, for each impact, risk, and opportunity, we weigh the individual respondents' declared expertise level, and we assign a weight based on the methods through which their data was collected. Next, we average the scores for each question per stakeholder group. On top of that, we apply a stakeholder topic weight matrix to calculate a weighted average across all stakeholder groups. Such a matrix provides a structured approach to balance the influence of different groups based on their relevance for the specific topics under consideration. Simple example is to give end consumers a higher weight on topic S4, consumer and end users, and a lower weight on environmental topics. Finally, scores are aggregated per subtopic, using the highest score for each of the underlying categories: positive impacts, negative impacts, financial risks, and financial opportunities. When aggregating, positive impacts cannot be netted against negative impacts. Impacts are to be assessed on their own, without taking into account other impacts. You need to use judgment when setting thresholds, basing them on your own specific facts and circumstances as well. What we at Karomia often use are either the mean or median impact and financial scores over all subtopics. How important is this step for your CSRD reporting? hugely important. The materiality results are used to knock off data points because you don't want to report on all 1000 plus data points. Setting thresholds ensure you only report on those data points that you need to report on. A good, structured double materiality assessment is critical for this. What we recommend to do next is to zoom in on those subtopics with an impact and or financial materiality score that's higher than 3 but lower than the thresholds you just set. These are what we call the undecided or potentially material topics. Now the goal is for each of them to define if and why they should be assessed to be material. How to do this? First, look at the level of consensus between and within stakeholder groups. A low level of consensus might indicate a reasonable amount of stakeholders still find some underlying impacts, risks, or opportunities very relevant. This might trigger you to mark the sustainability matter as material. Also look at the qualitative input collected besides the scores. Maybe some respondents misinterpret the IRO or its question. Maybe there is more to be understood from the respondent's perspective. Finally, you want to report your findings. Transparency is key here. Disclose your process and the outcomes. AFRAC outlines to disclose the following sections in your DMA report. A description of the process applied to identify and assess material impacts, risks, and opportunities, including the methodologies and assumptions. This is why it is critical to log every decision you make along the way. Also, for not doing certain things or excluding certain data points. It will make your reporting effort much more seamless. Description of the outcome. What are the material impacts, risks, and opportunities? And why? What are the resulting material sustainability matters? For each identified material IRO, disclose whether it relates to your own operations and or upstream or downstream value chain, as well as relevant time horizon. At Karomia, because we store all your data in a structured way already, we are able to auto-generate your end report with one click, leaving only a small fraction to be completed by you or your consultant. Now, let's move to the frequently asked questions. First off, can I do it in Excel? You can, and many do, including the big four. But from what we hear and see, it will be a challenge. There are a few downsides to using Excel. A double materiality assessment is a process and a funnel in which you deal with vast amounts of data and in which you take your IROs through different steps, as outlined before. If you're not hyper-structured and running a tight ship, this easily becomes a mess in Excel. This is also why many DMA tracks today are pretty expensive because of all the manual labor and management they require. It's also part of the reason why we started Karomia, to build a software to simplify this by a lot and to make it accessible to companies of all sizes. How often should you run a DMA? The CSRD defines the frequency of sustainability reporting as yearly. As a consequence, each year you also need to determine your material impacts, risks, and opportunities, as well as the material information to be included in your sustainability statement. However, if you would conclude that the materiality outcome of the previous period is still relevant, there have been no material changes, you can reuse the existing assessment. In case you don't run a new DMA, you need to be able to explain to the auditor why you made that decision. Minor changes can be covered by a simple annual update of your previous assessment, focusing only on those impacts, risks, and opportunities that are affected by those identified changes. On the other hand, material changes would trigger a redo of your materiality assessment. Possible triggers could be a major merger and acquisition, entering a new sector or a significant change in operations, a significant change of key suppliers, and so on. How to involve your auditor? The short answer is the sooner the better. In our approach, we have two check-ins with the auditor. One right after the step of stakeholder mapping, before starting your data collection. Here, you can show your auditor what IROs you selected and what stakeholders you plan to engage. This gives your auditor the chance to validate what you have done so far and if your planned outreach is sufficient. It decreases the effort of the audit later and it decreases the risk of getting a negative review at the end. The second and final check-in is at the end of the process, when your materiality results are defined and your report composed. Here, the auditor will mainly focus on your methodology and assumptions. Why and how were decisions made? They will also compare your results with those of other actors in the same or similar industries. When they would identify major differences in terms of what you concluded to be material, you'll have to provide more in-depth context. When leaving out certain sustainability matters, it doesn't hurt to inform your auditor early about this. Let's wrap up and recap by summarizing how your double materiality assessment with Karomia would look like. First, we automatically generate impacts, risks, and opportunities based on your existing documentation. This saves you months of time. We offer built-in engaging methods to collect data from your stakeholders with one click. Data management is structured and it includes an audit trail. And at the end, result calculation is again automated as well as report generation. So with Karomia, you can reduce your efforts with at least 50%, can optimize your stakeholder engagements, and you'll be compliant, get a positive auditor review. On top, and equally important, we really turn a double materiality assessments from a burden into an opportunity. You get lots of insights, such as stakeholder information, already integrated in the system and ready for review when you are. This data is going to be critical to inform your sustainability strategy and enrich your knowledge. A double materiality assessment with Karomia will help you put the priorities right. It gets you focusing on the things that really matter. Thanks for staying with us until the end. Don't hesitate to reach out if you'd have any questions, either through the comment section below or via the contact details provided here. Curious to learn how Karomia can support your CSRD journey as well? Try out our free sandbox environment on our website or book a demo.